Good evening, and welcome to Timing the Market for Friday the 13th of November, 2015. My name is Brian D'Amico, and I'll be providing your review tonight. Let's hop right into VectorVest. Here we are at the Home tab, and the most important thing that you need to be aware of is the market's direction. That's why it's front and center right here on the screen. You can see here the market timing gauge is pointing 2 ticks into the red, and the color guard is somewhat bearish. VectorVest does not advocate buying any stocks at this time. This gauge is a composite indicator of the top row of lights here in the color guard, and this color guard assesses the trends of 3 of the 4 components of our market timing system, and those components are labeled right here at the top of each column. They're also shown over here in VectorVest at a glance. So let's take a look. You can see that we're tracking over 8,000 stocks right now. And the first indicator that we look at is called the VectorVest Composite, or the VVC price. This is an indexed average of all the stocks that we track, and we look at it to show us the overall movement and the direction of the market. The next thing we look at is the VVC's RT, or the relative timing. This looks at the short-term price trend of the VVC. It's on a 0 to 2 scale. When it's below 1, as it is now at 0.93, the short-term trend is down. The next thing we want to look at is the overall health of the market, and that's the buy-to-sell ratio, or the BSR. What we do here is we take the number of buy-rated stocks divided by the number of sell-rated stocks to get the ratio. It's below 1 right now, at 0.48, and that tells us that there's overall market weakness. The last thing is we look at the underlying trend of the market. You know, what's going on that you might not see with the naked eye? To get this number, we analyze the trends of each of these other 3 components into this market timing indicator. When it's below 1, as it is now at 0.88, it tells us that the underlying trend of the market is down. Knowing each of those data points is, number 1, very important. Number 2, makes you a more informed investor than the average investor out there. But guess what? Number 3, you're also more informed than basically money managers out there, or at least a lot of them. You know, the ones that don't use VectorVest? So you're more informed than those people. So to take this to the next level, you want to know not only the data points, but you want to know what direction they're moving. Are they trending up? Are they trending down? Or are they just moving sideways? That's where the color guard comes in. Because at a quick glance, based on the color, you know that information. Red means it's going down. Green means it's going up. Yellow means either there's a transition or it's just moving sideways. So if you look here in the color guard, what do you see? You see a lot of red and yellow over the most recent few days. That tells you that this market is moving down. And it's very clear. I actually had somebody in a webinar today, brand new to VectorVest, seeing it for the first time, and he said, "Hey Brian, I was looking at that home tab you just showed, and it looks like you got red lights going across the board. I guess that means you shouldn't be buying stocks, right?" Yeah, so I mean that's why we make the color guard the way it is. At a very quick glance, you get that information. So let's dig a little bit deeper and see what's going on today. So here in the price column, we can see that the VVC dropped from yesterday, and look at this, it dropped from last week. So you might be thinking, all right, well, why isn't this red here in the price column? Well, you should know that it can't turn red directly from a green. There has to be a transition. You'll notice that the 2 days prior were red, because if I go back a day, you can see that this red was being compared to a yellow, so it could turn red, and so was this red compared to a yellow. So it can go from yellow to red, it just can't go from a green to a red, at least here in the price column. Since the price of the VVC dropped from last week, if I come over to the trend column, this first part right here is called the primary wave, which is the fastest indicator that we have on market direction. This is down since the price is lower than last week, and you can see it went from up to down on November 9th, and it stayed down. You never want to trade against this. So if the market is moving down, you're not buying stocks. Going back over to the RT column, you see it's red. Well, it's red because it fell from last week, fell from yesterday, and it's below 1, so it's red. Same thing with the buy-to-sell ratio. Now, if we look over here at the MTI, that's been falling pretty steadily over the past week, and you can see that graphically right over here. After this nice run up, look at how it's dropping like a stone. Since it's below 1 now, If you look over here in the trend column, this second part represents the MTI. Since it's below 1, this is also down, and you can see it changed from up to down, or from above 1 to below 1 on the 12th of November. The most conservative signal that we've got is the confirmed call. For this to change to a confirmed down, we need the price of the VVC to fall for 2 weeks. In other words, 2 consecutive 5-day periods. And guess what? That could happen as of Monday. Because as of Monday, it's going to be compared to November 9th. So if the price of the VVC, which it most likely will be, lower than November 9th's 36.94, it would have fallen for 1 5-day period. And we already know that this November 9th price was lower than 5 days prior than that because we have a down right here. The only other thing that would happen, or need to have happened, is the price to just go down on Monday. So if we have a down day in the market on Monday, you're going to see a confirmed call change from up to down. Because the only other rule that's in place is this buy to sell ratio needs to be below 1. And it already is well below that. So if we get that confirmed down call, that's the last signal that would come. That's the most conservative signal. Now, if it doesn't happen Monday, it could happen Tuesday, because we also have it down here, or Wednesday, or Thursday, or Friday. So while we're here at the Home tab, let's scroll down and see what it says in the strategy box. Here it states that the price of the VVC fell $1.20 over the last 5 trading days and closed the week at 36.09. The primary wave turned down on Monday, and the trend of the MTI turned down Thursday. Read my essay of August 28, 2015 on how to use the VIX. It's telling me that the alarm bells are ringing. Wall Street's sentiment has turned very bearish, and the VVC's candlestick pattern suggests that the downward trend will continue. Take and/or protect profits. You may even want to buy contra ETFs and/or sell short. 22 of this week's 25 top one-day Derby winners are bearish portfolios. And if you don't know what that means, it's basically saying, of all the searches in our system, every day we look at the top 5 performers each day over a one-day period. So 5 on Monday, 5 Tuesday, 5 Wednesday, so 5, 5, 5, 5, 5. 25 over the week. Out of those 25, 22 of them were bearish. So it's saying the bears are taking over here. With 2 red lights and a down-down situation, the color guard is somewhat bearish. Prudent investors should not buy stocks at this time. Aggressive investors and traders should play the market to the downside. So if you're looking for any good news, there's none there. There's no hint that you should be buying stocks. And I really want to hammer that point home, because in our successful investing coaching session on Thursday, we had a bunch of clients come in, and a lot of their questions were that they were thinking about buying stocks. They were most likely brand new to VectorVest, brand new to what we're teaching here. And a lot of you may be in the same boat. And their questions were, I'm thinking about buying this stock, or take a look at this stock. I'm thinking about buying more of it. What do you think? And with so many people asking that question, I just want to hammer the point home that no matter what's going on, no matter how pretty the stock's graph looks, no matter how beautiful it is, how good you feel about it, we do not advocate buying any stocks right now. You gotta wait. You gotta wait until at least you see some green lights in there. We're gonna let you know when it's time to buy again. You gotta pay attention each day. All right? So let's get a visual of this. And I'm gonna go to the graphs tab. And I'm gonna come over here and choose market timing. Now this is the default look. This is showing the price of the VVC and the 3 indicators from the color guard. This layout that we're looking at here is called the VectorVest MTI layout. It's the default layout, but if you want to switch back to it because you've changed yours, just click Graph Layouts and choose VectorVest MTI layout. I think the best thing that I could do to explain what's going on with the market, because we've already gone through all the indicators. We talked about what's going on in the market just by looking at the Home tab. There's not a ton more we're going to glean just by going through it again here on this market timing graph. But what we can do is learn another piece of information. And to do that, I'm going to read Dr. DeLito's essay tonight and visually demonstrate it to you. All right, so his essay this week is titled The Day the Canary Died. He starts off his essay by stating, long before electronic smoke detectors were invented, coal miners carried caged canaries as a safety precaution while working. They knew that the canaries would die well before the level of any poisonous gases in the mine would be harmful to humans. In a similar manner, our buy-to-sell ratio is the VectorVest Canary. It will signal the end of the blast-off phase of a rally well before you recognized it. Look at a 1-year market timing graph in the VectorVest MTI layout. That's what we're looking at here, by the way. The VectorVest MTI layout, 1 year. Show only the VVC price and the buy-to-sell ratio. So I'm going to take off the MTI and the RT. Note that the intraday high price for 2015 occurred on April 27th. So I'm going to just show you that by hitting high-low. And if I put the date line back here, we can see on April 27th, 2015, that was the intraday high. The closing high buy-to-sell ratio for the year occurred 2 trading days earlier. So if I go back 2 trading days on April 23rd, on the very next day, now watch this, very next day, April 24th, the price of the VVC closed higher than it did on the 23rd, but look down here at the buy-to-sell ratio, it dropped. And Dr. DeLito says that in caps. He says, yet the buy-to-sell ratio closed lower. So April 24th was the day the canary died. A new canary was born on September 30th, 2015. So let's just slide over that date. So if I come over, and I'm going to choose September 30th, which is right there. So there's September 30th, because that was the day the market bounced off of this low right here on the 29th. Dr. DeLito goes on to say, the canary began to gasp on October 12th. So let me just keep going forward. There's, went too far. There's the 9th. You see how there's the VVC. On the 12th, notice how the VVC goes higher, because there's another green light, or excuse me, another green candle. But down here, the buy-to-sell ratio dropped. So it's starting to gasp, says Dr. DeLito. And then it did the same thing on the 19th. See right there? It happened again. The VVC on the 19th goes higher. The buy-to-sell ratio goes lower. Dr. DeLito goes on to say, but the canary survived and was flying high on Tuesday, November 3rd. So if I go up to November 3rd, there we go. The buy-to-sell ratio closed at its highest level since April 24th. But Miss Janet Yellen, head of the Fed, testified before Congress on the very next day, Wednesday, November 4th. Although the market opened higher before her testimony, it closed lower after her testimony, and the buy-to-sell ratio fell 0.22 points. So if I show that here, let me go forward 1 day to the 4th, and I'm now going to zoom in a little bit more so you can see it better. The VVC opened higher, but closed lower, which is why we have a red candle and it's filled in, and the buy-to-sell ratio fell. Dr. DeLito goes on to say, I had warned about Yellen in the strategy section of the October 23rd views. With the price of the VVC having gone down 5 of the 7 trading days since November 4th, the threat of a December interest rate increase has had a more dramatic effect than I expected. And you can see that here with these red light, candles since the 4th. There's 1, 2, 3, 4, 5. 5 of the 7. Dr. D then goes on to say, for all intents and purposes, November 4th was the day the canary died. If you want to know more information about the canary, Dr. DeLito says, click on the Views tab up at the top. So click Views. Over on the left-hand side, there's this Views Manager, and you can see that right here. All you have to do is type the word canary in this box. So if you type the word canary, click on Selected Sections, and select Overview. And when you click on Search Views, you're going to see the results show up down here at the bottom. I'm going to scroll down, and you're going to see several results showing up here in the list. You're going to see 10 results, plus, of course, the one from today, which makes 11. Dr. D says, make sure you read the one from January 5th, 2007. So that's the very first one. All you have to do is double-click on it, and it's shown right here in the list. If I scroll down, where it says use the rules, and it goes on to where it says the canary is gasping for air. Dr. DeLito says it's especially appropriate under current conditions. So I'm going to give you a little bit of homework. You have to read those 2 paragraphs as your homework. So if you were smart, you could have paused the video and just read it, or you can go back and pull it up yourself. All right, so I'm actually going to pull this back to the most recent date, and to do that, I'm just going to double click right here to be fast about it and change this back to all. All right, so I think that was a pretty good summary of what's going on in the market. Basically, you shouldn't be buying stocks. We could be getting a confirmed down call next week. You're very defensive on your positions. You're either moving to the sidelines, going more into a cash position. Some of you are going to be playing the market to the downside with contra ETFs, short positions. If you're an options trader, you're buying puts or doing other bearish option trades. With that, we're going to continue reading the Views, which is our nightly newsletter to keep you informed on what's going on in the market. At the top, we have our contact information. I'll scroll down. We have our webcast schedule. And by the way, if you are not attending this Successful Investing Quick Start course coaching session, definitely register for it. I have so many people say, hey, Brian, I didn't know you had that. Well, come there, and we're going to keep you on the path of being successful. All right, I'm going to scroll down. There's our market in review. You can read about the things that affected the market each day. Here's that essay that I just read to you, The Day the Canary Died. Then I'm going to scroll down, and right there to the Jockey Club in review. Dr. Dolito says the 10 episodes of the Jockey Club are in the books. And it was another eventful week. Mr. Todd Schaefer hosted the entire week, and he changed his portfolio selection process midweek at the request of numerous attendees. He switched his analysis mode from staying in prior close after the market opened to going to market open at 9:30. He then advocates waiting until 9:45 before making his final portfolio selection. This technique appears to offer a less hectic process, and one that looks pretty good. Here are the results, and you can see the results there of what was going on this week. If you don't know what the Jockey Club is, or you want to get in on the Jockey Club each day, what you could do is come down here, and we're offering a free 30-day trial to the Derby and Real Time. And to do that, you can click here and get started with that, and you can join in on the fun of the Jockey Club. Below that, we've got the earnings update. Dr. D says, according to FactSet's earnings insight, 74% of the 463 S&P 500 companies which have reported Q3 2015 earnings so far have exceeded the mean earnings estimate, and 45% have reported sales above the mean estimate. Blended Q3 earnings growth decline is now at negative 1.8% compared to the September 30th forecast of negative 5.1%. VectorVest's November 13th, 2015 forecast of S&P 500 average earnings per share, EPS, is $4.50 per share, unchanged from last Friday. Our S&P 500 earnings trend indicator remained at 1 since last Friday. If and when it goes above 1, it will signal a bull market scenario, so stay tuned for next week's earnings update. And with that, I'm going to scroll down past the valuation section. Here's the timing section, which details how the color guard gets its colors. And you can see here an expanded version of the color guard. And you can see about a week or two ago, you had a mixture of all colors. That should send out warning bells that there is just transition or indecision in the market, and you're either very nimble or you're just not really in the market because there's no true direction. There's up, down, it's kind of sideways. And now the reds have just taken over recently. Down below that is the strategy box, which I already read. And here's the section where Dr. Dolito was referencing regarding the Derby winners. Right down here is the top Derby winners over the 1-day period. And here are the searches when we look at a cumulative 5-day period. All right, now I'm going to scroll down past that. And we're going to come to our strategy of the week / special presentation this week called Trading Higher Highs and Lower Lows. Finding stocks, industries, and sectors hitting new highs and lows is a powerful approach. But which type should you use? A 52-week high, a 13-week high, or maybe a 5-day high? Join Mr. Todd Schaefer, Manager of Research, for this week's special presentation titled Trading Higher Highs and Lower Lows for more insights on using this powerful tool. I hope you all enjoy that special presentation and have a great weekend. Take care, everyone.